There was a point that it was GameFi. There was a point where it was blockchain gaming. There was a point where it was play to earn, that they were the flavors of a particular season, and they also started to go up. And if you notice it also right now, I think by the time I'm making this, there are some games also that are highly connected to fitness. So given that it's highly thematic, you have to also be strategic on how to make your exits, especially if you're trading, especially when you bought when the market was higher, especially when you bought when there's a lot of excitement. Over the past few weeks, we've seen the crypto markets continue its downward push. We've seen Bitcoin go from 69,000 all the way to below 28,000. We've also seen Ethereum from 4,800 drop below 2,000. But please do note this, that every time Bitcoin drops and then Ethereum drops, a lot of the smaller altcoins get normally wrecked. They drop at a higher percentage. And in a way also, a lot of the ones that maybe don't have utility, or the ones that moved up primarily because of hype, primarily because of speculation, or primarily based on the hope that it could possibly push higher, are the ones that maybe over a given period of time, even if we see the market start to recover, they may not start to push up anymore. Please do note this, that even if you look at cryptos that pushed in the previous cycle, 2017, when they started to push up, and a lot of them during 2017 really did very, very well. When the markets crashed, a lot of them up until now, 2022, have not really gone back up. Even if you try to compare the top 100 tokens and coins via coin market cap, you could see that from 2017, 2018, 2019, 2020, a lot of the top tokens already via market cap right now have significantly changed. I think that's one of the interesting things to look at in crypto, that people always say that hodl for the long term, stack for the long term, but you have to be selective on what you're actually stacking. You have to be selective on what you're actually buying. You have to be selective on what you want to hold on to for the long term, because if you notice it, a lot of the ones that have pumped, they've dumped, and as they've dumped, they are having a hard time to go back up. And if you notice it, it's becoming thematic, meaning there was a point in time where everyone was so hyped up about the metaverse, and then you saw Sandbox, you saw Decentraland start to go up. Then there was a time also that it was DeFi even prior to that, and you saw a lot of DeFi related protocols, you saw a lot of AMMs, you saw a lot of DEXs start to push up as well. Then if you notice it also, there was a point that it was GameFi. There was a point where it was blockchain gaming. There was a point where it was play to earn, that they were the flavors of a particular season, and they also started to go up. And if you notice it also right now, I think by the time I'm making this, there are some games also that are highly connected to fitness. So given that it's highly thematic, you have to also be strategic on how to make your exits, especially if you're trading, especially when you bought when the market was higher, especially when you bought when there's a lot of excitement. And I'll say this over and over, that it's true that we're not as high as where we were at some point last year, but at the end of the day, if you know how to pick your spots, you know how to pick the ones that have quality, you know how to pick the ones that are actually good, you know how to pick the ones that they may have a chance of better staying power. In essence, cryptos that have quality, and that's why people made this Bitcoin a lot, people made this Ethereum a lot, but they're the quality tokens, they're the quality coins, they're the ones that over and over we've seen them crash already, but they have rebounded. They've been bigger, better, and stronger, even though they've crashed in the past. And I think that's one thing we need to learn also as individuals, that not everything that gets talked about are the ones that are worth buying, are the ones that are worth trading, are the ones that are worth riding. You have to make your own due diligence also on how you start allocating for specific tokens and coins, and no one can fault you if you want to go for the safer bets. And people always diss the ones that, oh, it's too big already, it won't go up anymore. The thing about the stock market is, I would always say that, okay, when markets are down, it's also nice to get the ones that have upside. The difference between crypto markets is it's hard to actually determine over the next 10 years also, or the next 20 years, which will be the ones that will have staying power. And we can have a lot of parameters. We could look at certain things. We could look at, okay, these are the ones that have a lot of developers, these are the ones that have dApps attached to it, these are the ones that people are building communities around it, the best talent are moving around this space. We could put all of that together, but there are a lot of things that we could also not foresee. There could be attacks similar to what happened to Luna. There could be vulnerabilities that in just a few days, one of the largest ecosystems in terms of market cap could drop massively, and that could happen over a span of a few days. And those things don't happen in the stock market. You won't see movements like that in a span of days go from its highs to zero, because at the end of the day, in the stock market, you're buying companies. When you buy companies, the companies have assets. When you buy companies that have assets, their assets have value, and those assets that have value could also be sold. Unlike in the crypto space, you're not buying equity in a company, you're not buying ownership, you're getting tokens. And as of this point in time, also, given that the crypto space is so new, there's no established way of valuing tokens yet. It's not like the stock market where you have DCF. It's not like the stock market where you can use dividends. Please do notice that people could project, okay, you could earn this much via staking it, but please do note also that a lot of these projects that the APYs that are given out, they're not really like dividends that are based on earnings. They're not really like bonds that are based on interest rates. That bonds, especially retail treasury bonds or government bonds, that they're fixed. If you notice it, this APYs could go down very, very fast also. And the thing about that is I've seen and experienced also a lot of liquidity pools, farming protocols also get drained, and that's something that people need to realize, that it's not just driven by what the APY is, it's not just driven by what the possible returns that you could get from staking is, but you also have to realize that there are risks attached to it. And case in point, you have Anchor, which was giving 19-20+% in terms of revenue, in terms of staking returns if you staked in their platform. But what's interesting about this, and I want to say this, that if you look at Anchor, people were actually scared that what happens if the rewards go to zero. And if the rewards go to zero, majority of the people who are in the ecosystem are in it for the rewards. And if it goes to zero, you might see mass withdrawals. But similar to what happened to Anchor, the rewards actually then go to zero. The vulnerability caused a lot of people to panic, and rightly so. If there's no trust in a particular system, people panic. If there's fear, people panic. And if people panic, they withdraw. And if people do that in a very, very large way, more sellers bring the prices down. And that's what we saw also. We're not like the stock market where there's a lot of tangible things that you could put in, impute value over certain tokens. The mere fact that we're buying tokens and the mere fact that we're early is that volatility is attached to it. And I want to say this over and over, that I've been saying that the crypto market is so early, and with that is a lot of imagination, and with a lot of imagination also comes a lot of volatility and comes a lot of risk. That's why if you want to be in this space, you also have to strap in, because this won't change for a very, very long time. And that's where a lot of your conviction is so important. And that's where, when times like this happen, it's how much you know about what your plan is, what your strategy is, and the projects that you're investing that will see you actually through. So I guess that's just my 2 cents on this entire market. I hope that this gives you value. If you want to know more about crypto, you want to know more about altcoins, you want to know more about NFTs, if you want to have maybe a semblance of how things are analyzed as well, and you want the basics about this, check out the links in the description below. I have an investment 101 masterclass down below. I also have technical and fundamental classes also that you could watch, which are recorded Zoom classes, which you could watch on demand. So let me know. Details are in the description below. And if you guys have questions, I'll try to make more videos for all of you guys as well. So that's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.